Alright, so we're going to take a look at adjusting entries. So the first adjusting entry we're going to look at is prepaids. So we'll look at an example for prepaid insurance. So let's look at a scenario where we prepaid $1,200 of insurance for 12 months. So we prepaid 12 months for $1,200. So we know that even though we paid $1,200, we recognize expense when it's incurred, not when it's paid. So every month that goes by, if we take our $1,200 divided by 12, we're going to recognize $100 of insurance expense every month. So our adjusting entry to the prepaid insurance account is we're going to reduce prepaid insurance by $100. So that's going to be a credit. And then our debit is going to be to insurance expense for $100. So we're recognizing the expense as it's incurred, $100 at a time, versus the whole $1,200 chunk when we paid it. The pure basis of accrual basis accounting, recognizing expenses as they are incurred. All right. So the next one we're going to look at is depreciation. So in a business, we have what's called plant assets. So plant assets, they're long-lived tangible assets, used more than one period, and they're used in the business. So examples could be equipment, machinery, buildings. However, over time, these assets lose their usefulness. So this loss of usefulness is recorded to the income statement as depreciation expense, and it's recorded on the balance sheet as accumulated depreciation. So let's look at an example. So say a building has $100 of depreciation this period. So in a later chapter, we'll look in deeper on how to calculate depreciation, but for now, we'll be given depreciation here in chapter 3. So our adjusting entry to record depreciation is always the same. We're going to debit depreciation expense, and we're going to credit accumulated depreciation for the $100. The two accounts are always the same. But notice our credit wasn't to the account building, our credit was to the account accumulated depreciation. So accumulated depreciation is a special account called a contra asset. And what a contra asset means is it's an asset with a credit balance. So it's a contra asset or an offsetting asset. So again, we're not touching the account called building. We're touched because building stays at historical cost. Every period, our credit is to accumulated depreciation. All right, next we'll look at accrued revenues and expenses. So what happens in a business is, for instance, say at the end of the period, so at the end of the month, that we performed $700 of services, which have not yet been invoiced. So during the month, we performed $700 of services. We haven't invoiced it yet. But we performed $700 of services, so we earn the revenue. So since we earn this $700, we have to get it on the books. So to accrue revenue, we'll debit accounts receivable and credit revenue for the $700. This way, our income statement is accurate because we have our $700 of revenue reflected, and our balance sheet is accurate because the assumption is that we are going to get paid that $700 at some point in time. In addition, accrued expenses would work the same way. So if you got a $500 invoice for some kind of expense at the end of the period, you have to get it in the books because you incurred the expense. So your debit would be to expense, and your credit would be not accounts receivable. Your credit would be to accounts payable. So those are adjusting entries. Please review and let me know if you have any questions.